I think all taxes are really interesting, but there is a certain subsection that is maybe just a little bit more interesting, and that is called qualified small business stock exemption. And so when you talk about this exists under IRS Code Section 1202, and it allows you to exclude $10 million worth of proceeds from selling qualified small business stock from taxation. And so there are very strict guidelines from the IRS on what exactly qualifies for this exclusion. And so I kind of want to run through those and just give you a quick highlight of what it takes. And so the first requirement that the IRS have is that it has to be a domestic C corporation. So if you have shares from a partnership or an S corporation, you can immediately know that I am not going to be qualifying for this exclusion. And then the second one would be that the shares have to be original issuance from the C corporation, cannot be bought off of another investor or even another founder. It has to be originally issued from the company. The next big requirement is that the IRS requires that you hold the shares for 5 years. And so from the date of issuance to the date of sale has to be a 5-year holding period. And it's not prorated. So say you end up holding the shares for 4 years and you're like, oh, okay, I'm getting close. The IRS says, nope, that's still zero exclusion. You're going to pay all the taxes on the $10 million of proceeds. And once you hit 5 years, then you can have your $10 million, but not until then. And so there are other requirements too. And so the IRS says, what is a small business? And so to the IRS, that means that immediately before and immediately after the issuance of your stock, your company cannot have more than $50 million worth of gross assets. And so who knows this? The person who knows this is going to be your company's CFO. And so they're going to be a great resource for you to determine if you've met that small business requirement. And so from there, we do have another requirement for excluded services, but technology is not one of the excluded business activities for qualified small business. And so we don't tend to worry about that as much, but there are certain businesses like health fields and even financial services that are excluded. And so all of that together determines whether or not you have qualified small business stock. And then you're going to go ahead and report the transaction on your tax return. So you're still going to have that $10 million worth of proceeds on your tax return, but then somebody like KB Advisors is engaged to make sure that you've met the requirements for this, and therefore you can back out that $10 million under the exclusion so that you can not basically pay extra taxes. And so it's all really interesting. There's even more opportunities beyond this to play with qualified small business stock and get even higher exclusions. And so if you haven't checked out our blog, there is a whole section on it for founders, early employees, and you can see what qualified small business stock can mean to you. And then you can book a call with us if it interests you. So really appreciate you stopping in, and I hope you found it interesting.